Hello, everyone. Welcome to this webinar today. This is part of the tools to create opportunities. And today I'm going to be talking to you about crowdsource funding equity raising. My name is Peter Towers. I'm the Managing Director of ESS BIZTOOLS. So welcome. If you have any questions during the webinar, can you please type your question into chat and I will answer the questions during the webinar. If you are watching this webinar on a live feed to Facebook and you have any questions, unfortunately you can't log straight in to this recording, but please send me an email, peter@essbiztools.com.au. If you're watching this webinar at a later time, which suits your day-to-day business activities better, and if you have a question, please send me an email, peter@essbiztools.com.au. I hope everything is going well for you wherever you are around Australia. Today, we're going to be talking about crowdsource funding equity raising, and I'm going to start with an overview so that we try to set the scene leading into the package that ESS BIZTOOLS has developed. Because I think this particular legislation was really made for accountants who are committed to supplying a broader range of professional services, because many businesses could do with this ability to be able to raise capital, but they have to get themselves investment ready and they will need your assistance. So let's go through it. The eligibility is that this process is available to private companies and unlisted public companies, potentially eligible. The company is originally formed under Section 708 of the Corporations Act. Crowdsource funding equity raising is suitable for any type of business unless there's legislation prohibiting a particular type of business being operated by a company. The group international turnover for the company at the date of classification has been suitable for crowdsource funding equity raising is $25 million. And the company group value of assets, the gross value of assets must be under $25 million also. That's just a coincidence that those figures are the same. The company has to get itself into an investment ready status. That's very important. This is not just a matter of turning up and saying to someone, I want to raise $700,000 or $5 million. There is a process and the directors and the leadership team need to go through it, and they will need your help, or virtually every one of them will need your help, I think. And some statistics I'm going to share with you later on, I think really proves that. They need to be investment ready. That means they need to have a workable, usable business plan that they've all signed on to. There needs to be a series of predictive accounting reports, budgets, cash flows, and projected balance sheets, coinciding with the business plan, looking forward to the next 3 to 5 years. There needs to be a corporate chart. Who's who? Where are the operations? What's this company do? What patents has it developed? What knowledge has it got? What intellectual property has the company developed? What's the business vision? Is it just to raise some capital, or is it to start a scaling up process to develop a bigger and stronger business? And what do the directors believe the valuation of the company is? For argument's sake, if they're going to go to the market to raise $1 million, what percentage of the shareholding of the company is going to be allocated to the shareholders who represent that $1 million? If it's only 5%, I think they've got a problem. So we need to have a chart that outlines, based on financial projections, what the company is worth today, and if $1 million was contributed, what is the percentage of shareholding that those shareholders would want? Because this information will be analysed by the crowdsourced funding intermediary, and we're coming to who they are shortly. I think it's very important that if you're going to work in this space, you ensure that your clients, the directors and the leadership team, clearly understand how crowdsourced funding equity raising operates. Now, it's now been running in Australia for 3 years, so there's ample availability of literature on the internet and from time to time in the mainstream media. So people presumably have got some idea of how this operates, but if they're going to be in there raising capital, I think they need to have a clear understanding. And one of the first things they need to understand is the role, the duties, and the responsibilities of the crowdsourced funding intermediary. There are two distinct roles. When the Prime Minister, who was then the Treasurer, introduced this legislation into Parliament in 2016, took some while to get through Parliament and operational, he called the intermediaries the gatekeepers representing the Australian Security Investment Commission. Why? Because it is the intermediary who checks the application process, who checks the crowdsourced funding offer document, which we're also going to talk about shortly, and signs off on it, and basically accredits the company to be a crowdsourced funding equity raising company. But the intermediary wears another hat. They are a promoter, because the various intermediaries that are publicising what they're doing in Australia have indicated that they have somewhere between 25,000 and 50,000 people registered with them who have expressed an interest in being kept up to date of companies who are trying to raise capital. In other words, they are potential investors in these companies. So the role of the intermediary is to check the documentation, to have discussions with the directors and the leadership team, to check that they are who they say they are, and then assist in the actual raising of the money. And to do that, they will be talking to the leadership team and the directors about things like social media and marketing and general publicity. And at the same time, they will be sending emails and promotional literature to the thousands of people they have on their database, promoting your client's company. At the same time, they're doing the same thing for a number of other companies, but that's how the process works. The key document is the crowdsourced funding offer document. It's equivalent of a prospectus, but it's not as complicated as a prospectus and definitely doesn't cost as much. But it's a very important document. And in our process, we're going to look at that. The directors nominate the minimum capital raise they would like to achieve. They can set two figures. They can set the minimum capital raise, which might be, say, $1 million, but then they can also nominate a maximum capital raise, which might be $1.6 million. In that case, they have to specify separately in the offer document what they would do with that extra $600,000 if they were able to raise it. And the company can raise up to $5 million in a 12-month period. That's $5 million. They don't have to try to raise $5 million. In fact, it's only been attempted on 2 occasions that I know of, but that's the maximum that the company can raise. A company could start and raise $3 million now, and later in the same 12-month period, they could try to raise a further $2 million, as long as they've gone through the process of appointment of the intermediary and got the intermediaries okay to proceed. The company directors appoint the crowdsourced funding intermediary that they want. Now, what I should have explained, ASIC has appointed 16 businesses to be intermediaries. They all hold Australian financial services licenses. And there was about 400 firms applied for that registration when it was first advertised. Out of the 16, 4 are proactive, 2 in particular who have got around 80% share of the market. Another 2 have probably got around 15%. And there's a few others. Some of them don't seem to be proactive at all. So the intermediary will produce a contract for their services. The intermediary under the legislation can charge a fee, which is normally a percentage of the capital raised. But they could also take shares in the company, but they need to disclose everything that they're being paid. Most of the intermediaries will ask for an upfront fee of around $2,000 to $3,000. That's to enable them to conduct their initial due diligence and start the process of getting the company ready. So it's the crowdsource funding intermediary who basically approves the change of status, because this company's been incorporated under Section 708. That's what all companies are incorporated under, really. And the company then is going to raise capital as a crowdsource funding equity raising company. Now, the investors receive ordinary shares in the company. This is not a loan. It's ordinary shares. There's no security. There's no interest payable. From a company director's point of view, this is a great way to be able to raise money. But to do that, they've got to get their house in order. They've got to go through the proper process. Otherwise, they will not succeed. And they mightn't get past the intermediary's review in any case. Now, the company can have 3 shareholders. You'll remember that currently a private company can only have 50 shareholders. That still remains, and that group is still there. The company can also have employee shareholders, and it can also have this new category called crowdsource funding equity raising shareholders. So we need to be familiar with that. And one of the key things then is to realize that all these shares are aggregated together to determine the percentage of shareholding held by individual shareholders. I had someone ring me one day and there were 2 original shareholders. So they were the original formation shareholders and they owned the company between them. So 50-50%. They were going to raise, they thought, about $1 million, and they were going to issue, I think it was about 30% shareholding to the new people. And when I was speaking to this person, he left it at there. And I said, hang on, what else are you doing? He said, what do you mean? I said, these shares are all equal. Ah, so you've got to do an adjustment on the original shareholders' shareholding, I think, before you start going down this track at all. So you need to get the valuation done first and allocate shares, more shares to the current shareholders. Otherwise, they could find themselves in the invidious position that they potentially outvoted. And that could be very awkward for them and for you. So please remember that. We have to go through that process and really think this through. It's difficult to have a shareholders agreement if you're going to be utilizing crowdsource funding equity raising, because you might end up with 1,000 or 2,000 shareholders in this process. Can you imagine trying to get 1,000 or 2,000, even a couple of hundred shareholders to sign a document like a shareholders agreement? I don't think you're going to be lucky on that. So that could end up a disaster. So again, one of the first things that's got to be done is to look at the company's constitution. Does it suit a crowdsource funding equity raising company? Probably doesn't. Therefore, it needs to be amended before you go down this process. So your client needs to be fairly sure this is what they want to do, and they need to be committed, because we're now talking about them spending money before they get started. because they can't expect to change these documents after they've raised capital. Getting everyone to agree on those types of things and running extraordinary general meetings becomes a bit of a nightmare. And the obvious question is, why didn't you do this first? So I think the Constitution needs to be looked at. One of the other things that I haven't mentioned so far, these companies need at least 2 directors to be a crowdsourced funding company. So the current Constitution might talk about only needing 1 director. We now need 2. And a majority of directors must be resident in Australia. So if you do have an overseas director, you then need a board of at least 3 directors. So the Constitution's got to reflect this. This is part of the pre-planning that is necessary. And I view today's discussion with you people as the start of that pre-planning. The crowdsourced funding intermediary is the person who has the power to either accept or reject the crowdsourced funding offer document. Now, if you're smart, you'll make sure you work in conjunction with the intermediary. Your client's already appointed the intermediary. The documentation normally goes backwards and forwards a couple of times before everyone's happy. Your client's happy, you're happy, and the intermediary's happy. It makes for a great relationship. And when all that occurs, the intermediary's in the position to hit the starting gun. Now, prior to that, the intermediary may say they want to do some preliminary promotion via social media and even in the newspapers, because there's no restriction on advertising when it comes to raising money utilizing crowdsourced funding. So the intermediary is the expert in this. They will guide you through that process. So when all that's concluded, the intermediary uploads the offer document to their website. Now, the law is very strict on this. All transactions must be completed on the intermediary's website. Why? Because there's an investment warning document that every investor must acknowledge that they have read, they were shown, and they understand it. So this covers the managing director's favorite old aunt who wants to invest $150, as long as it's above whatever the company set as the minimum subscription, because the company sets the minimum subscription. The favorite aunt can't hand over $150 in cash to the managing director. She has to go onto the website. She might need someone alongside her. She can do that, of course, but she needs to go onto the website so that the investment warning is clearly shown to her. The capital raising must be completed in a maximum of 90 days. That's the legislation. But it ceases when the specified amount is raised or at 90 days, whichever occurs first. So if the company has only set a minimum subscription of $800,000 and that's raised in 5 days, that is the end. You cannot have an oversubscription unless the company has nominated a maximum subscription amount. But if it's only nominated one figure, that's the minimum subscription. Whenever that's raised, that is the end of the capital raising. Now, if the minimum subscription is not raised by the stated time, and the company can say that its subscription period's going to be open for 60 days, doesn't have to be 90, although I always recommend everyone states 90 days. If you raise it all in 4 days, that's wonderful, but give yourself the best opportunity, so 90 days. But if at the end of that period, either the specified time or 90 days, the minimum subscription hasn't been raised, all monies, 100% of the monies raised has to be refunded to the investors. Now, most intermediaries are getting paid on a percentage of the capital raised. It's around 6 to 7%. So they will not get paid other than the upfront payment that they may have charged the company. And obviously the company doesn't get any capital. Now, the capital raising success in Australia has been running at about 92%. So some companies have finished short. And this all gets back to making sure the whole process is organised efficiently to try to maximise this capital raise. When the subscription period is ended, for at least the minimum subscription, or if there was a maximum, whatever the amount is. Now, I should have commented on that before, I suppose. If there's a minimum amount and a maximum amount, you can still keep anything over the minimum, but less than the maximum. So if the minimum was set at $1 million and the maximum at 1.8, and the company only raises 1.3 million, that's the amount of money that has been raised, 1.3 million. You don't have to give $300,000 back, the excess over the minimum amount, because you haven't raised the maximum amount. So the intermediary then sends a statement about 6 days after the final date, because there is a cooling off period for retail investors. Retail investors have got 5 business days in which they can change their mind and ask for their money back. And it does happen at times. Incidentally, the maximum amount that a retail investor can invest is $10,000. So the statement shows the total capital raise less the intermediary's negotiated fee, and the intermediary will then transfer direct into the bank account that the company has nominated the net amount. The intermediary does submit a report to ASIC to give them a summary of what's happened, tell them the capital raise, give them all the information, how many shareholders, how long it took, all that sort of data, so that the government can, ASIC can monitor it for the government. Now, the intermediary plays no further role. Some people think that the intermediary is there for life with the company. He's not, or that organization's not. When the intermediary has sent the report to the company and to ASIC, that his relationship with that company has ceased. The company could reappoint the intermediary at some future date to undertake a further capital raising, but the process has to be gone through again. But the company should be a lot more aware of what's going to happen second time round, so it mightn't be as long, but they can reappoint the same intermediary, or they can select others. But you can only appoint intermediaries from the list that ASIC has appointed, which I said at this stage is 16, and only 4 appear to be active on a day-to-day basis. So what happens then? Well, the directors have got to ensure that share certificates are issued to these new investors who are now their shareholders. I think it's appropriate that a properly worded communication goes to those shareholders. Welcome, this is who we are. I think there should be some sort of commitment made by the directors. We're going to communicate with you every 3 or 4 months to tell you what's happening in your company. The share registers need to be prepared, and a return of allotment of shares for crowdsourced funding shareholders has to be lodged with ASIC within 28 days. There's a bit of work to be done. One of the key considerations will be who's going to do that work. Is it the company secretary, which could be you as the accountant, or is it going to be someone else? It could be a commercial organization. A number of the crowdsourced funding companies have appointed commercial organizations to operate their share register part of the business, because they're normally they are all computerized these days, and they're experts at handling this, and they take that on for a fee. So it's one of the fees that be looked at. Incidentally, when setting the amount of capital to be raised, you need to make sure that your clients have factored in the costs that are going to be paid for this capital raising. You've got the payment to the intermediary. There will be incidentals, for videos being produced, for flyers, for some functions to promote the capital raising, which can be done. And there will be the fees for you as the accountant or business advisor in getting the client through to this investment ready status. So I believe this should be added in. The client can say how much money they want and what they're going to use it on, but then the cost should be factored in as well. So that at the end of the day, the client gets the net amount of money that they need to implement the strategies. Sure, they can come back and go through the process again in 6 months' time if they've raised the capital successfully the first time. But it just needs some planning, because going back to raise money is going to take time, takes executives away from their day-to-day work, and is going to, it costs some money. Now, to assist you to coordinate this process, ESS BIZTOOLS has developed a crowdsourced funding equity raising product package. As far as we know, we have developed the only package in Australia. And this one was specifically developed to assist accountants, business advisors, and chief financial officers. In other words, a group of people who are consulting to SMEs around Australia that might be considering raising some capital. So who's the most popular type of companies to be able to raise capital? There's been some recent performance reviews produced by Equitise. Equitise is a Sydney-based intermediary. It's one of the two top companies. The other one is Virtual in Melbourne. But Equitise has produced some reports, and they've identified fan bases or enthusiastic customers are very important for this capital raising process, because many of these fans and customers will invest in these types of company. The capital raised in 2021 increased by 125% on what was raised the previous year. So a total in 2021, right through the COVID-19 problem, $46 million was raised from around Australia. The average amount raised was $700,000. The report from Equitise indicated that fintech companies, alcohol brands, and innovative food products were the leading companies when it comes to quickly raising capital, utilising crowdsourced funding, equity raising. And the average amount per capital raise is around 700,000. There's been significantly lower. There has been capital raises of up to 5 million and around 2.5 through to 3.5 million. And some of the companies have then gone back to raise capital on further occasions. I've talked about the intermediaries. Two of the intermediaries have got about an 80% share of the flow deal, and two others have got about 15% of the deals. And they're the intermediaries who are dominating the market at this stage. Now, one of the most interesting things that has come out of the Equitise report that's been publicised and published within the Financial Review is that they have indicated they take on fewer than 5% of the companies that reach out to them. And I'm very confident that if we had someone from Virtual producing a similar report, they would say something very similar, 5%. And of that 5%, Equitise has said only 70.6% are then actually successful in raising capital. So what's that? About 3.6% of companies that started with Equitise were able to raise capital. I'm not very happy with that figure. In fact, I think it's disastrous. And I think it highlights the very high necessity for companies to receive appropriate professional advice and mentoring from people like you, from accountants, business advisors, chief financial officers, lawyers, because it seems to be a huge waste of time and potential because all those other people that represented 95% of the companies had, I'm sure, what they thought was a good case. But they obviously were not investment ready. They hadn't got some advice. They hadn't worked on it. And I suspect part of the problem is that the Australian accounting industry has just about 99% of time, I think, ignored this market opportunity. I think there's a great opportunity for accountants to get a real toehold into this capital raising process. And there's other ways of doing this also. We've got early stage innovation companies. We've got Section 708 capital raising. And there's more and more companies then graduating for initial public offers later on. So this is an important part of the startup phase. And I think it's an activity that accountants should be grabbing with both hands and saying, we want to be involved in this. Because these companies all need business plans, budgets, cash flows, projected balance sheets, corporate governance, directors who understand what this process is all about. Corporate governance, I haven't even mentioned that today, but I've run corporate governance training course for these types of companies, for their directors, to have a better understanding what their duties and responsibilities are. I think it's a great opportunity. And that's what I've just said. You're the key professional group. So congratulations on your interest in this activity, which if successfully completed will also contribute to the value of your client's business. Client's business is going to be worth a lot more if every year, for argument's sake, they can go back to the market and raise $1 million, $1.5 million, as long as they've got reasons for what they're going to do with the money. They've got to satisfy the intermediary and satisfy the investment market. But it's a great way for a company to be able to scale up. Under the legislation, they can keep on going back to the market year after year, as long as the total raise in a 12-month period does not exceed $5 million. It's a tremendous opportunity. So welcome to ESS BIZTOOLS Crowdsource Funding Equity Raising Product Package. We're now going to take you on to our product package so that you can have a look. I'm just looking at chat. I've got no chat come into me yet, but if you have any questions, please type the question in. I hope that overview of how crowdsource funding equity raising operates is of benefit to you, to give you an appreciation of where we're going. We're now going to show you a sample of our product package because it would take hours to go through the whole thing. So just bear with me while I just bring up our website. So what you have on the screen now is the ESS BIZTOOLS Crowdsource Funding. For those of you who are not familiar with ESS BIZTOOLS, we have 30 product packages, and each year we add another 2 or 3. Last year, the big package was research and development. We've got packages for crowdsource funding, obviously, early stage innovation company, chief financial officer services, business plans. We try to prepare documentation for anything that we think accountants could produce that's outside the traditional annual accounts and income tax areas. So we've already clicked on, we're going to go to download the content. What we have here now is a list of what's contained within the system on crowdsource funding equity raising. There's a lot of documentation. The BAS is business advisory services, not the BAS the tax man talks about. We had it first, incidentally. As far as I know, we did anyhow. We were using it back in from 95 onwards when we started selling this product to hundreds of accounting firms around Australia have joined us over the years. So there's a whole range of forms that supply answers. Many of these forms are meant for you as the accountant to be able to send to your client or your prospect. Some of them are communications that you could use on Facebook or on your website or in actual news releases you put out in your local area, especially if you're in a provincial city or in a country area where you've got more chance of getting something published in the news media. But the real target is your own clients. And I suggest that you go through and think about your clients. Who's in a position where they like to have some money, but they really haven't got any assets they can offer as security, but they've got a good business and they've got a fire burning in their stomach. The leaders of the business have, and the directors, they really want to go somewhere. This is made for them, but they need some assistance from people like you. And then we'll just move down. Then we got a number of papers that talk about various aspects of crowdsource funding equity raising. Okay, so let's go back up to the beginning, because the first document is called the Procedure Control Form. This is a document that we have in every component of ESS BIZTOOLS to help with the identification of material. So you should be able to see that document now, the Procedure Control Form. This just guides you through the process. First of all, we tell you what it's all about, how it works. And then I'm going to pull out some forms so you can have a look at them, so you get an understanding of what the process is about. And we call this a roadmap reference, step 1. So there's 12 steps as we see it in this process. So the first document I'm going to bring up is paper 003055. Now, first of all, we have an executive summary. There are 580 papers within ESS BIZTOOLS Advanced package, which is our main package, which includes everything we've produced. And other packages have got a lesser amount of papers. But for each of them, there's an executive summary, which gives you an idea of what's included. And you receive a paper and a set of PowerPoint slides. We're going to look at the paper. So we have the paper on the screen now, and there's a set of contents. And this is a paper that explores what crowdsource funding equity raising is all about. Where it come from, came out of the federal government's innovation strategy document that was tabled in December 2015. Then took a couple of years to get it through Parliament, and then for ASIC to get everything organised, to appoint the intermediaries. And it started in September 2017. Originally, the emphasis was on you had to be an unlisted public company, but then the government quickly changed its mind on that because that was not very popular. And then they made it available for private companies. And this is where I'm discussing the ordinary shareholders up to 50 shareholders, the employee shareholders, the Section 708 capital raising, including in the 50, and then where we're going to have crowdsource funding shareholders. So this is a document, so you can see that, and it covers a whole range of matters. And I'm just working through the procedure control form. You can see it now talks about marketing material. There's a significant amount of the material in the system that will assist you with the marketing. So we have a matrix to look at the crowdsource funding eligibility. This is a matrix. You can sit down, you can write the name of the company, group. And incidentally, you might be thinking of some of your clients at present saying we haven't got many companies, but this could be a partnership or a sole trader at present. You could think this through and say, geez, we could transfer everything into a company so that we could take advantage of this. That's okay. It's from, as long as there's a company incorporated from the date the capital raising starts or the process with the intermediary starts. So here's a checklist. I forgot to mention before, a company cannot be listed on the stock exchange, any company part of the group. So there's a whole range of matters. Legislation's not worried about the age of the company, it could be 120 years old, or the business or industry that it's in. And what might the company be looking for them? Who are the companies that might be interested in this? Well, could be someone with a turnover over $2 million, and that's just a figure I've selected. Seems to me to be about the figure when people start thinking about scaling up. And they won't need cash, because if they're going to scale up, they need more money. What do your clients don't appreciate that? And do you sit down and talk to them? But the money going into new plant and equipment, new fixtures, debtors, inventory, it all grabs cash as people want to grow, doesn't it? Might be a fast growing, ambitious business. It might be wanting to grow another business. They might have developed a big, audacious idea, but they need to be able to qualify that then and make sure it can all fit within the documents. So that's a document there that you could go through and determine whether the client was going to be eligible. We have another document I just wanted to share with you. This is an article you could send to your clients to give them a better understanding of what this is all about. You could sit down and select your clients, run a seminar or a webinar. You can run seminars again in the states that have been subjected to the lockdowns, but you could send this out to a bit like waving a flag, flying a kite, trying to get some response. Who's interested? You might be surprised who comes back to you and says, yes, I'm very interested in this. I would really like to be able to raise some capital. Just make sure they realize there's some hard yards. Life wasn't meant to be easy, someone said once. So hopefully that would help you. We go back to the original document and we'll have a look at a couple of other things. There's a section here for your quotation and proposal. We've prepared a document that you could utilize to submit your proposal. We've covered every facet of the work. From your point of view, if you get a client signs on to do this that currently hasn't got a business plan or a, let's call it a bankable business plan and a bankable budget and cash flow forecast, there's a fair bit of work to be done. Your team will find it quite challenging and interesting. So one of these is one of the documents that I want to get and show you, I think. There's a proprietary company checklist. So this gives you the opportunity of going through and just making sure where the directors are, making sure you've got confirmation of this consolidated annual value of the company and sales, the annual revenue, sorry, the gross value of assets, etc., because you're going to need a file on all this to satisfy the intermediary. You need to go through these key points, make sure you got the documentation, either print it or preferably put it on a computer stick so it can be transmitted to the intermediary. They can go through it. They'll come back and tell you anything they're missing. So you can see there's all sorts of documents coming up here. Some of them you might not need, but most of them I think you will, one way or another. Now I'm now going to show you the crowdsourced funding offer document. This is a important document. In fact, it is the most important document other than the business plan. This is the document though that gives you the okay to try to help your client to raise capital. And we have gone through and summarized this in accordance with the legislation. So you need to work through. You must make sure that the company is going to satisfy the eligibility test on assets, and we've got links to where supporting material is, so you can check on that. And the legislation sets out the key sections of information that has to be completed. There is a risk warning that is specified in the legislation, and everyone needs to understand that has to be included in the offer document. It has to be shown on the website where the offer is being promoted. And then there's got to be information about the offering company. The legislation requires full disclosure to be made of the directors and officers, and in particular, whether there's, and the company, whether there's been any problems with ASIC or ASIC's predecessor at any stage by any of those people has to be disclosed. So sometimes companies need to think seriously as to who are going to be the nominated directors of the company. And there's various reports that have to be submitted, and anyone who's producing a report, just like a prospectus, has to sign an acknowledgement and an approval that the document can be used in the process. Now, this is a full summary document we have prepared here. Some of this will not apply, but it, especially if people haven't had problems with the authorities in prior times, but we've summarized it all there to make sure it's not overlooked, because that would be very embarrassing if you've gone to all the trouble and all this and then found that the intermediary, who have got a direct access to all of ASIC's records, do find some circumstances that haven't been disclosed. So that's that document, which needs to be completed. The other one I wanted to show you was the general investor protection. So the company has to comply with the stipulated advertising rules, and basically it is that all advertising and promotion should be approved by the intermediary. If you get the intermediary to approve everything, you're basically safe. Any advertisements or promotions, and you can do that, must have the investment warning that I showed you before. Which would probably discourage anyone investing, but that's what the legislation says, and it's there for that purpose. The key investor protection is that investors can only make their applications via the intermediary's platform, website. The communication facility, which we haven't mentioned so far, once the offer starts, the directors and leadership team members need to be available on a daily basis, because if anyone's got any questions or queries on the company's documentation as it's disclosed on the intermediary's website, they can raise a question. The intermediaries are very concerned to make sure there's a response within 24 hours to every question, and every question and answer stays on the file so that other potential investors can read the questions and answers. So there's a lot of information floating around, and your clients need to understand that this is how it works. And there can't be unsolicited telephone calls. It's, if you're going to contact people in the general marketing, it's a general nature, tell them to go to the intermediary's website where they can read all of the material. I still haven't got any questions, so hopefully that has given you all an understanding of what is involved in this process of looking at crowdsource funding equity raising. I now want to take you through why you should be getting involved with ESS BIZTOOLS in this activity. We produce the sort of documents I've just shown you for 29 other product packages, and some of them we have in a special promotion which we're calling Tools to Create Opportunities, because we believe there are some great opportunities going to emerge in not only the Australian but the world business scene over the next year or so. How can you get involved? Well, if you're not already involved in delivering business advisory services, we want to encourage you to do so, because we got this special promotion which is only for $795, and you get 7 great products. So that's an upfront payment, including GST. You get 12 months, 24/7 access to our Tools to Create Opportunities products. It's a great way to introduce a range of diversified services to your firms. So you get 7 great products. So you receive 4 standard products. We have the business advisory services training modules, which will help your team get trained. We produce a newsletter each month, which we call Business Plus. You get 13 editions. You don't get one in January, but you get 2 extra in May, one on the federal budget as it affects SMEs, and the other one on an end of year tax planning edition. I showed you some of the ESS papers there before. You get 343 of them, which cover 60 categories, from starting a business to business planning to key performance indicators to benchmarking, whole range of material which you can badge and send to your clients to give them the confidence that you understand beyond taxation. Because a lot of your clients think all you know anything about is taxation. I know you know a lot more than that. You did a lot more than that at university and in your professional year training. But you need to communicate it and market it. So these are also marketing tools. And then you have Sme Needs Analysis. This is the most important document in our whole product package. That's why we're making it available in this, because we want you to use it. It's a series of questions and points of discussion that you could sit down and talk to your clients about and find out from them what's really worrying them. It might be on their debtor system. It might be on their key performance indicators. No one understands them. It might be on future capital raising. It might be on obtaining a government grant. It can be on a whole range of issues. It's a very important document. So in this package, you get each of those. So you've got those 4. Then you can pick the 3 additional ones that you would like to receive out of the list which we've got on the screen at present. So there's 5 business health checks. This is beyond benchmarking. We use some of the benchmarking information, but then other information that's only available within your client's company. business planning, a charge out rate for tradies, which we conducted a couple of weeks ago. If you'd like to view the webinar we produced on that, you can get that on our website. Professional firms charge out rate. We're presenting that webinar in a couple of weeks' time. Retail and wholesale businesses, looking at the mix of various types of products and markups. How do they make a profit? Buying a business. Client mentoring and coaching modules, some material that you can send to your clients to give them the satisfaction that you're committed to being able to help them on a broader range of services and taxation. Crowdsource funding, equity raising, what we've looked at today. The debtors management system. We've got the highest debtors days outstanding in the world. I think it's a national disgrace. It's very close to this less than 5% of businesses going to an intermediary. Australia's joint leading intermediaries and getting knocked back because they're not investment ready. That's also a disgrace. Early stage innovation company. Have you got someone who has invented something new? It might have gone through some research and development, who now wants to raise capital. There's a special piece of legislation there to help them raise money from investors. Yet I find that a whole number of our profession as accountants don't know that these products are there for them. Government grants. We have hundreds of government grants in our system, and we have a process by you can identify it. Leadership and personal property securities register. So that's the, no, it's not, there's a bit more. Selling a business, a debtor systems manual, succession planning and survival in difficult times, which is 38 questionnaires that you can work with the client. And then there's articles for each of those 38 questionnaires that you can then send to the client on the ones that they got some problems with. It might be debtors management. It might be understanding how the personal property security system works. It might be getting ready to raise some capital like we're talking about now, just giving them some more information. Because I found over the years, if you can give your clients some information on some of these specialist areas, it doesn't take long for them to really appreciate that you are an expert in these areas. And you can very quickly become an expert by utilizing our material to give you the start and then start working with your clients. So that's the package. You select 3 of those, you get the other 4, you got 7, and for $795, you're underway. So if you need more information, you can send me an email, please, and we'll send you the product brochure. Our new website's been installed, but we just got some fine tuning to do on it, and our developer hadn't included this new promotion we're currently doing. So we'll send that to you. Just send us an email, peter@essbiztools.com.au, and we'll send them to you. We have another webinar on tomorrow. We're representing mentoring seminars and webinars. I think seminars and webinars are a great promotional tool. Now, for 2 years, no one's been able to run seminars, but webinars you can run, and depends where your clients are. And obviously now seminars should now be available to everyone to look at. And we have got a whole range of seminars and webinars. There's 10 of them included in this package. We've got 36 in total in our overall system, but 10 of them are available in this package we're talking about today. And then on Thursday, we've got a webinar on leadership modules. So there's 4 leadership modules included in this package, which we're referring to here. So that gives you a great opportunity. We also have another promotion on at present for our starter package. It's got 17 packages. So the one we're talking about today, you get 7. We got 17. You can subscribe to that for $999. If you're interested in that, that's the 12 months up front, including GST. We can send you the details. In fact, they are on our new website, the starter package. You can go on there and find what's included. If you're interested in getting access to the full 30 packages that I referred to before, our special promotion package price for those is $3,200, including GST, which is the upfront 12 months amount that you'd pay now. Normal price is $6,500. These packages all include at least 1 hour of one-on-one mentoring with you or your colleagues in your firm and myself as we go through. In fact, for the advanced package, there are 4 one-hour mentoring sessions over a 12-month period. So we try to work with you to build you up. We also run a monthly webinar for our subscribers, and we produce a monthly special newsletter for them, which just gone out today, to be honest. And in that way, we are trying to help our subscribers, our members, to be able to really offer these type of services. So if you want to contact me, there's the contact details. Give me a phone call, 1-800-232-088, or send me an email, or visit our new website, please, www.essbiztools.com.au. So thank you very much for joining us in this webinar. I look forward to hearing from you. Have a great day. Goodbye.